Imagine standing at the crossroads of a crucial decision in life. Maybe it's a big career move, a health change, or even a personal relationship. You know that one choice could propel you towards success, while another could derail your progress for years. But what if you could approach these decisions like the world's greatest investors do? People who manage not only to seize opportunities, but to protect themselves from huge, avoidable mistakes. Howard Marks, one of the world's most respected investors, offers a powerful roadmap in his book, The Most Important Thing. And while the book is primarily about investing, its lessons extend far beyond finances. It's about decision-making, risk control, and the kind of independent thinking that can help anyone, from entrepreneurs to those on a personal growth journey, navigate life's uncertainties with clarity and confidence. By the end of this video, you'll have new tools to approach every significant decision in your life, whether it's in business, health, or personal development. Let's explore the most important things you need to know about the most important thing. Introduction. Howard Marks is no ordinary investor. As the co-founder of Oak Tree Capital Management, a firm that specializes in managing high-risk investments, Marks has seen it all: bull markets, crashes, irrational exuberance, and devastating recessions. His ability to think critically, manage risk, and recognize where opportunities lie has earned him a stellar reputation in the financial world. His memos are widely read by top investors and CEOs alike because they don't just offer predictions, they teach a method of thinking. This method, which is the core of the most important thing, can help you make better decisions, not just in investing, but in all areas of life. In this book, Marks boils down decades of experience into a series of key lessons. These lessons aren't about how to pick stocks or time the market. They're about how to think about risk, rewards, and probabilities. Marks emphasizes that it's not the person who swings for the fences that wins, but the person who avoids catastrophic losses while still positioning themselves for growth. Whether you're an entrepreneur trying to build a business, someone trying to improve their health, or someone simply wanting to make better life decisions, this book offers invaluable insights. Let's go chapter by chapter through Marks's wisdom, applying his lessons to various aspects of life beyond finance. Chapter 1. Second-Level Thinking. We begin with one of the most important ideas in the book: second-level thinking. Most people operate on what Marks calls first-level thinking. First-level thinkers see only what's in front of them, often reacting to surface-level information. For example, in the world of investing, first-level thinkers might see a stock price going up and assume that the company is doing well, so they should buy. Or they might see everyone jumping into a new technology and assume that following the crowd is the smart thing to do. But here's where Marks introduces a game-changing idea: second-level thinking. Second-level thinkers dig deeper. They ask tougher questions. They don't just ask, "What's happening now?" They ask, "What's likely to happen next and why? How is everyone else thinking and what are they missing?" It's about thinking counterintuitively, questioning the obvious, and looking for hidden truths. Let's apply this to entrepreneurship. Imagine you're considering starting a business in a crowded market, like online fitness training. A first-level thinker would look at the booming market and assume there's plenty of room for growth, since people are more health-conscious than ever. But a second-level thinker would ask, is the market already saturated? How will I differentiate myself from hundreds of other fitness trainers? What if the trend changes? What happens to my business then? Second-level thinking isn't just about analyzing markets or investments. It's about how you approach problems in general. Let's say you're working on personal development, trying to adopt a new habit, like waking up early every morning. A first-level thinker might simply focus on following the habit for a few weeks, expecting that sheer willpower will get the job done. But a second-level thinker will dig deeper. Why am I doing this? Will this habit truly benefit me in the long term? What obstacles will I face, and how can I plan to overcome them? Similarly, in health, second-level thinking might be applied when considering a new diet or exercise program. A first-level thinker might jump into the latest fad because it promises quick results. But a second-level thinker will ask, is this sustainable for me? How does this fit into my long-term health goals? What are the potential risks, and how will I mitigate them? Marx emphasizes that the ability to think at the second level is what separates good decision makers from great ones. It's not about reacting to what's happening right now. It's about anticipating what might happen next, thinking beyond the obvious, and questioning the assumptions everyone else is taking for granted. Chapter 2. Understanding Market Cycles. In this chapter, Marx delves into one of the most critical, yet often overlooked aspects of investing, and life in general, cycles. Everything in life moves in cycles: markets, businesses, even our personal lives. Recognizing where you are in a cycle is one of the most important things you can do to make better decisions. Let's start with a basic example from investing. The stock market doesn't move in a straight line. It goes through periods of growth, bull markets, and decline, bear markets. Marx explains that most people get caught up in the emotions of the moment. When the market is rising, they assume it will keep rising forever, and when it's falling, they panic, assuming it will never recover. The key to successful investing is understanding that these cycles are natural and inevitable. More importantly, knowing where you are in the cycle allows you to make smarter decisions. When everyone is overly optimistic, it might be time to be cautious. When everyone is fearful, it could be the time to take advantage of opportunities. But this idea of cycles applies far beyond investing. Let's think about entrepreneurship. Every industry goes through cycles, periods of rapid growth, followed by slowdowns or corrections. Take the tech industry, for example. We've seen cycles of massive innovation, followed by periods where things slow down and companies consolidate. A savvy entrepreneur needs to understand where they are in the industry cycle to make smart decisions. If the market is at its peak and competitors are flooding in, it might be a good time to focus on risk management and sustainability rather than aggressive expansion. On the other hand, if the market is in a downturn and competitors are pulling back, it might be a great time to invest in new opportunities, assuming you've prepared for it. In personal development, cycles are also present. There are periods when you're full of energy, enthusiasm, and motivation, ready to tackle your goals. But there are also periods of stagnation where progress feels slow and you might feel discouraged. Understanding these cycles helps you navigate them more effectively. Instead of getting frustrated during a slow period, you can remind yourself that growth often happens in waves and that a downturn is just a natural part of the process. Similarly, in health, cycles are crucial. Your body goes through cycles of high energy and low energy, times when you're at peak performance and times when you need rest and recovery. Athletes, for instance, understand the importance of cycles, training hard for a period, then taking time to recover. If you push too hard during a low-energy phase, you risk burnout or injury. Recognizing these cycles allows you to pace yourself and make better decisions about when to push forward and when to pull back. Marx's point here is that cycles are inevitable. You can't control them, but you can control how you respond to them. By understanding where you are in a cycle, whether it's in the market, your business, or your personal life, you can make more informed, thoughtful decisions that set you up for long-term success. Chapter 3. Risk Control. This chapter is all about risk, something that we all deal with in every aspect of our lives. Marx argues that while most people focus on returns, the rewards they hope to gain, the most important thing is actually risk control. Why? Because while returns are unpredictable, risk is something you can manage, and avoiding large losses is often more important than chasing huge gains. In investing, risk control means not putting all your money into a single stock or a highly speculative investment. It means diversifying, hedging your bets, and being prepared for the worst-case scenario. But this principle can be applied to any major decision in life. Take entrepreneurship, for example. If you're starting a new business, there are inherent risks involved: financial risks, market risks, operational risks. A smart entrepreneur focuses not just on the potential upside of the business, but on how to manage those risks. What if the product doesn't sell as well as expected? What if there's a downturn in the economy? By thinking about these risks up front, you can put measures in place to protect yourself, such as keeping operating costs low or having a contingency plan. In personal development, risk control might mean setting realistic goals and expectations. If you set yourself an overly ambitious goal, like trying to change multiple habits at once or expecting drastic results in a short time, you risk burning out or getting discouraged. Instead, focus on steady, manageable progress. By controlling the risks of failure, you increase your chances of long-term success. Health is another area where risk control is essential. For example, let's say you're considering a new workout routine or diet. While it's tempting to go all in on something that promises fast results, there are always risks involved: injuries, imbalances, or unsustainable habits. A smarter approach is to control those risks by starting gradually, listening to your body, and adjusting as needed. This way, you avoid the risk of major setbacks, such as injury or burnout, that could derail your long-term health goals. Marx teaches us that while we can't predict the future, we can control how exposed we are to negative outcomes. By focusing on minimizing risks rather than just maximizing rewards, we protect ourselves from the kinds of setbacks that can have long-lasting consequences. This applies to investing, entrepreneurship, personal development, and health, any area where thoughtful decision-making is crucial. Chapter 4. Patience and Discipline. In today's world, where everything seems to happen at lightning speed, patience is often in short supply. But in this chapter, Marx reminds us that true success, whether in investing, business, or life, requires patience and discipline. These are not glamorous qualities, but they are essential for long-term success. In investing, patience means not reacting to every market fluctuation or trying to time the market perfectly. It means having the discipline to stick to your long-term strategy, even when the market is volatile or when others around you are panicking. For Marx, it's about resisting the urge to chase short-term gains at the expense of long-term stability. But patience and discipline aren't just for investors. Let's apply these principles to entrepreneurship. Starting and growing a business takes time. There will be moments of rapid growth, but there will also be times when progress is slow and it feels like nothing is happening. A successful entrepreneur understands that building a business is a marathon, not a sprint. It requires the patience to wait for the right opportunities and the discipline to keep pushing forward, even when the results aren't immediate. The same goes for personal development. Whether you're trying to develop a new skill, build a habit, or work on your mental health, progress takes time. It's easy to get discouraged when you don't see results right away, but that's where patience comes in. The disciplined person keeps showing up, day after day, trusting that the effort will eventually pay off. It's about playing the long game, whether that's in your career, your relationships, or your personal growth. In health, patience and discipline are critical. We live in a culture that promises quick fixes, 30-day fitness challenges, rapid weight loss plans, and overnight transformations. But real, lasting health changes don't happen overnight. They require consistent effort over time. Whether you're trying to lose weight, build strength, or improve your mental health, the key is to stick with your routine, even when progress seems slow. The disciplined person understands that the most important changes often happen gradually. Marx's message here is clear. Success isn't about short-term wins. It's about having the patience to wait for the right opportunities and the discipline to stick to your principles, even when it's tempting to deviate. This is true in investing, in business, and in life. Chapter 5. Value investing in life. Marx is a value investor at heart, which means he looks for assets that are priced below their intrinsic value. But this concept of value investing can be applied far beyond the stock market. It's about finding opportunities where others don't see them and investing in things that will pay off in the long run. Let's start with an example from business. In entrepreneurship, value investing might mean finding an underserved niche in the market. Instead of jumping into a crowded industry with lots of competition, a smart entrepreneur looks for a space where there's a gap, where demand is high, but supply is low. This might not be the most glamorous or trendy industry, but it's where the real value lies. By identifying these opportunities, you create a margin of safety that protects you from competition and gives you a better chance of success. In personal development, value investing is about investing in yourself in ways that pay off over time. Think about learning a skill that others might overlook, but that will give you a significant advantage in your career. Or maybe it's about investing time in relationships that provide long-term value. Relationships that help you grow, challenge you, and offer support. Marx teaches that value isn't always obvious. It requires looking beyond the surface to find what's truly important. In health, value investing might mean focusing on habits that provide long-term benefits rather than short-term results. For example, instead of chasing the latest fitness trend or diet fad, you focus on the fundamentals: eating nutritious foods, getting regular exercise, and managing stress. These are the value investments that will pay off in the long run, even if they don't provide instant gratification. Marx reminds us that value isn't always easy to spot, and it often requires going against the crowd. But those who can find true value, whether in the stock market, in their careers, or in their personal lives, are the ones who come out ahead in the long run. Chapter 6. Defensive Investing. While many people focus on aggressive strategies for growing their wealth, Marx is a firm believer in the power of defensive investing. This doesn't mean avoiding risk altogether, but rather protecting yourself from catastrophic losses. In investing, defensive investing means being cautious when others are being reckless. It means focusing on minimizing risk rather than chasing big returns. Marx teaches that the key to long-term success is avoiding large losses. If you can protect yourself from major setbacks, your chances of long-term success increase dramatically. But this idea of defensive investing applies to other areas of life as well. In business, it might mean having a solid backup plan in case your initial strategy doesn't work out. It's about being prepared for the worst while still aiming for the best. Defensive thinking helps you avoid the kinds of risks that can derail your long-term success. In personal development, defensive investing could look like maintaining balance in your life. Instead of pushing yourself to the brink of burnout, you invest in rest and recovery to ensure you have the energy to keep going. It's about making sure your foundation is strong before you try to build something bigger. In health, defensive investing might mean listening to your body and knowing when to pull back, rather than pushing through fatigue or injury. It's about making sure you don't sacrifice your long-term well-being for short-term gains. Marx reminds us that in both investing and life, avoiding major setbacks is often more important than scoring big wins. By focusing on protecting yourself from risk, you set yourself up for long-term success. Chapter 7. The Role of Luck. One of the most humbling lessons in The Most Important Thing is Marx's acknowledgement of the role that luck plays in life. No matter how smart or prepared you are, there will always be factors outside your control. In business, some entrepreneurs succeed because they were in the right place at the right time. In personal development, some people seem to find the right mentor or opportunity just when they need it. And in health, some people are blessed with genetics that give them an advantage. But here's the key. While you can't control luck, you can control how exposed you are to its negative consequences. Marx teaches that the best way to manage luck is to focus on what you can control, like your risk management, your preparation, and your mindset. By doing this, you minimize the impact of bad luck while positioning yourself to benefit from good luck when it comes. Chapter 8. Contrarian Thinking. Throughout the book, Marx emphasizes the importance of contrarian thinking, the ability to go against the crowd. In investing, this means being cautious when others are overly optimistic and being opportunistic when others are fearful. But contrarian thinking applies to any area of life. In entrepreneurship, success often comes from seeing opportunities where others don't. Maybe the market is down and everyone else is pulling back, but you see a chance to invest in a business that will thrive in the future. In personal development, it might mean pursuing unconventional paths to growth rather than following the same trends as everyone else. Contrarian thinking requires courage. It means trusting your own analysis and being willing to stand apart from the crowd. But as Marx points out, the greatest opportunities often come when you're willing to take a different path. Chapter 9. Humility and Adaptability. Finally, Marx teaches us the importance of humility in investing and in life. No matter how much you think you know, there will always be surprises, setbacks, and things you didn't anticipate. Humility means recognizing that you can't predict the future with certainty, and that sometimes the best-laid plans won't work out. In business, humility might mean being willing to pivot when your original idea doesn't pan out. In personal development, it might mean acknowledging that growth takes longer than expected, and being patient with yourself when you hit roadblocks. In health, it might mean accepting that some things are beyond your control and focusing on what you can influence. The key is to stay adaptable. Marx teaches that while you can't always control the outcome, you can control how you respond to challenges. Humility and adaptability are what allow you to navigate life's uncertainties and come out stronger on the other side. Key insights. So, what are the most important things you should take away from Howard Marx's book? 1. Second-level thinking is about digging deeper and questioning assumptions, whether you're making a business decision, working on your personal growth, or managing your health. 2. Understanding cycles helps you navigate the natural ups and downs in life, whether in the market, your emotions, or your physical well-being. 3. Risk control is the key to long-term success. It's not about avoiding risk altogether, but managing it wisely to avoid catastrophic failures. 4. Patience and discipline are essential for achieving sustainable success, whether in business, personal development, or health. 5. Value investing applies to all areas of life. Look for opportunities that others miss and invest in yourself and your future in ways that provide long-term benefits. 6. Defensive thinking is just as important as offense. Protect yourself from losses, and you'll be in a better position to succeed over time. 7. Luck plays a role in life, but you can manage how much it affects you by focusing on what you can control. 8. Contrarian thinking allows you to see opportunities where others don't, and to take advantage of them when the time is right. 9. Humility and adaptability are crucial for navigating life's uncertainties. Be willing to learn, to pivot, and to grow when faced with challenges. In the end, the most important thing isn't just a book about investing, it's a book about how to make better decisions in all areas of life. Whether you're an entrepreneur, someone on a journey of personal growth, or someone focused on improving your health, the lessons in this book can help you navigate uncertainty, manage risk, and ultimately succeed in whatever you pursue.